All right, you thought I missed it. You thought I missed it. You thought I missed it. Beyond Meat's earnings, had to talk about them because we look at the 5-day chart. They reported Tuesday after hours, and the stock has fallen nearly 7% since then. Stock took a big hit yesterday, no doubt. Today, looking like it's slightly up, following around the market. And we got to delve into those earnings and see what the reasoning is for it. My pick for reasoning is likely related to valuation concerns. Just had to smack that little ant. Tried to be on the computer screen, and you know what I feel about that? I didn't like him, so I smacked him. I humanely released him into the wild. Now, this picture on the bottom here makes me a little upset. The Beyond Sausage, I don't think they should be showing pictures of my Schmeat on the screen. So Beyond Meat EPS, non-GAAP EPS of negative 2 cents was in line. But from a GAAP EPS perspective, they posted negative 16 cents, which missed by 14 cents. A little bit less profitability than expected, no doubt about it. But from a revenue perspective, you got to give them credit. Up 68.5% year over year, beats by 13.99 million. Very good growth there. Especially in everything going on, As expected, a majority of their business does come from retail sales, especially they have a lot of partnerships, obviously, with places like, really every fast food place at this point. And those places have seen reduced traffic, so what can I say? Less traffic equals less revenue for them as far as those products are concerned. But, they still have retail, and retail sales have been out of this world. Gross margin rate was up 90 basis points. Good to see that. Beats the consensus as well. Let's look at the fine details, baby. So revenue jumped 69% as we expected. We were talking about my Schmeat earlier, and you know what? 69 just goes along with it. I hope so, at least. Despite softer demand from the food service channel. Growth in volume sold during the quarter was driven mainly by increased retail channel sales resulting from distribution gains both domestically and abroad, higher sales velocities at existing retail customers, and contribution from new product introductions. That's right. Increased gross margin was primarily due to direct materials and packaging input cost savings, direct labor efficiencies, and an increase in volume of products sold. Net income of $2.3 million. That's right. That's some money. $2.3 million versus negative $76.6 million a year ago. So, hey, that's what I call a company progressing. It's good to see it. A full year guidance is still suspended. Definitely part of the reason for the stock being down, I can't lie. Let's get into their presentation. Beyond. Go Beyond. We skipped the disclaimers because we don't care about them. That was a burger on the right, in case you were curious, but it wasn't a burger, it was a Beyond burger. So we use proprietary science to redefine Schmeat. They're redefining meat, believe it or not. So they're taking everything they can to replicate the core structure and sensory experience of meat, from the sound, the color, the texture, the aroma, oh gosh, and the taste. From what I've heard, and I've never tried this, I've never tried any of them, but people are pretty confident on this. Shown below, you see a close-up picture of my Schmeat, apparently Beyond Sausage. I don't know. I don't remember putting it under a microscope, but you see, it's pretty close to a pork sausage, which makes me feel kind of weird in terms of that. A little close, even on the confocal laser micros. Okay, you know what? The word doesn't work for me. Microscopy. It's rough for me, but we're gonna say that. As far as burgers, you see, look at this raw burger. It looks pretty similar. A little bit more orange in color. There's no doubt about it. But cooked wise, They show a super zoomed out picture so you can't see any difference, but they do look the same cooked. I mean, I'll be fair, I've seen it. I've seen it happen. Improving human health. 42% reduced risk of developing heart failure associated with people who eat mostly plant-based diets. Now, again, mostly plant-based, I gotta be honest, it's not 100% sustainable by any means. I'm just gonna tell you that right now. You don't just live plant-based entirely. It's not something that really we can feasibly do. But I get their point. For those who want to switch to plant-based, they can see some benefits. They could definitely see some benefits. So, as far as positively impacting climate change, 18 to 51% of global greenhouse gas emissions are driven from livestock rearing and processing. That's quite a wide percentage, 18 to 51%. So, all things considered, I mean, you think about that and what it means. I don't know, wide percentage, that's all I can tell you. As far as addressing global resource constraints, we take a look at 78% of agricultural land is used for livestock. Well, yeah. 29% of water in agriculture is directly or indirectly used for animal production. Yeah. Okay. And they're improving animal welfare. 60 to 70 billion farm animals reared for food each year. Like, this is a point that I think is one of the dumbest points they can make. I mean, so what is the issue they're addressing here, right? The fact that we are obviously raising and killing animals for that, but you're not improving the animal welfare, because if we were not doing that, those animals would not have been breeded. Those animals are specifically breeded for consumption. So therefore, you're not improving animal welfare because those animals would not have existed. And frankly, these are species that you would kill off most likely if you wanted to. If you want to go completely plant-based, you'd be killing off most cattle. I mean, it's unfortunate. Most livestock and cattle would be completely killed off because we wouldn't be producing for it, or at least go into definitely an endangerment. So it's something you have to consider there as far as what you consider to be welfare. I don't know. I'm just telling you, these farm animals are raised for a specific purpose. Otherwise, they would not be raised. They're not just killing random animals in the wild. It's not how it goes. Sorry. I mean, I hate to spit facts on you, but I know you're trying to push an agenda. But sometimes we got to use a brain. We got to use our brain. Obviously, innovation is their focus. Revenue and development as a percentage of net revenue. Research and development as a percentage of net revenue. Obviously. 6.9%. That's a lot of research and development on this company. I can't lie. They're comparing it to other consumer products from Nestle to Kellogg. They put a lot of money and time into this research and development, which makes sense because, to be fair, they make a good product, and it's pretty accurate. Pretty accurate product. I can't lie to you, but it's interesting to see. It's interesting to see. Our approach as product strategy has made us a leading distributor in the meat category. You've seen year-over-year growth in terms of net revenues of 239% growth from 2018 to 2019. And year-to-date, from 2019 to 2020, you've seen 96% growth. Obviously, the growth is slowing, and it will continue to slow, which isn't a shocker because you can't sustain 200% growth. It just doesn't happen. They're saying the size of the global meat category is $1.4 trillion. You're not going to get that. I mean, I don't know what you think you're going to do, but people aren't going to all switch. I get what they're coming from there, but it's just not. I don't see the point of saying that, but I don't know. 26,000 U.S. stores sell their products. Food service outlets, 39,000 U.S. ones do. Worldwide, you see 112,000 food service outlets and 47,000 retailers internationally as well, worldwide. So obviously, total outlets, international is obviously skyrocketed because they've expanded internationally. And otherwise, U.S. food service has increased quite a bit with all the partnerships they've signed, and just retail has increased 53% as well. Do need to know about that. Brand awareness, they say, they shouldn't be showing a growth category, but at IPO is completely different from where it is now. But unaided brand awareness has, tripled, nearly quadrupled, and total brand awareness has doubled. So that's good for them. Over a 2-year period, I'd hope so, but Beyond Meat, velocity growth, total market share over the last 4 weeks. So look at that. It's growth everywhere. I can't lie to you. It's growth everywhere. But from retail, they sell from Walmart, Sam's Club, Kroger, BJ's. That's gross. I will tell my Beyond Sausage would enjoy it. Nice. Costco, Albertsons, Whole Foods, Target. Naturally, look at all these places. Look at all these U.S. retailers. You see the revenue rise quite a bit. U.S. food service, not much of a difference year to date. If you're looking 2019 to 2020, and that's been my thing with this company. They really do push the food service part of it, and to be frankly honest, food service is not that important for them. You talk about a Beyond Burger at a freaking Burger King. It's not a hot menu item. And food service definitely isn't the future for this company either. It just isn't. Because, in all honesty, a lot of these bigger companies that sell these products, most of the time, they're going to, and trust me, companies like McDonald's and Burger King, they have the money for it. They are going to produce their own plant-based product because it's cheaper for them than buying from Beyond for the most part. So they're expanding food service partnership with the announcement of several new expanded partnerships from KFC. They're doing some fake chicken, Papa John's even this year, Del Taco, Einstein Bros Bagels, obviously the Carl's Jr. and Hardee's plan there with some sort of breakfast thing. I forget what it was. I don't go to Hardee's. It's like, it's expensive. It's expensive fast food. I don't get fast food as is, but Hardee's is some expensive fast food. And obviously, Yum Brands China products. Obviously, the Beyond Breakfast sausage, the reformulated Beyond sausage. It's not reformulated. It's been this way my whole life. Okay, the Beyond Fried Chicken, which I don't know what to think about that, but that looks like a chicken nugget. That doesn't look like fried chicken, but I guess technically a chicken nugget is fried chicken if you want to think about it, but still. The reformulated Beyond Burger and Beyond Beef. We like the Beyond Beef. I don't know. I've never tried any of the products, and at some point maybe I will. It's just pricey. Here's these charts where we discover all this, but we talked about that. Finally, we look at the balance sheet, and we're gonna scroll all the way down. Yeah. Again, I haven't tried the products, so you can roast me for that, giving an opinion on a company if I haven't tried the products, but I don't know. I just don't see the need myself. I'm pretty happy where I'm at right now. Total current assets of $429 million versus $403 million 6 months ago. Total assets in general of $527 million versus $451 million. Good to see that. Liabilities-wise, this company's pretty barren on it. They did raise some money from a revolving credit facility, so you saw overall long-term liabilities rose. But total stockholder equity did rise just a little bit, $389 million versus $384 million 6 months ago. The company's balance sheet is good. I got to give them credit. The balance sheet is not bad by any means. It's a good-looking balance sheet to outweigh your liabilities by around 2.5 times. It's good. Now, valuation of the stock is one that I don't necessarily like. We're talking about over $8 billion market cap for really a company that, annually likely Well, we can actually look it up here. That annually last year brought in. Let's get to it. Yeah, get into it. $297 million. So $297 million last year in terms of revenue, trading at a market cap around over $8 billion. We're talking about right around 20 times the value, a little bit more than 20 times. If I'm accounting for growth this year, around 15 to 20 times the value in terms of that, in terms of market cap. I don't like it at these levels for purchasing, in my perspective. I think the company's got a long way to go for sure, and I think there's a lot of progress that can be made with this company, and it could turn into quite a good company. I give them credit for that, but all things considered, it's not something I'm ready to buy in, and I don't think these levels are levels for me. But overall, still hope you enjoyed.